These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, that end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will set up a new company worksheet within Excel. A new company worksheet will be used in order to enter a comprehensive problem for a new business, working the transactions of the bookkeeping of a new business within the Excel worksheet. This being closer to doing the process by hand, doing the process with paper and pencil, a process that is much more transparent and will allow us to see all the components and the working parts of putting together the books for a company. As we do this, we will compare and contrast that to accounting software such as QuickBooks, and in so doing, we'll be able to see how QuickBooks processes some of the activity and therefore be better equipped to use accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. First thing we're going to do is set up the new worksheet, and we'll compare and contrast that to setting up a worksheet within QuickBooks, meaning setting up a new file within QuickBooks. What's the first process, and how can we do an equivalent process when we set up something in an Excel worksheet? More of a setting up by hand or by paper and pencil type of process. When we set something up in QuickBooks, we typically have a shortcut within QuickBooks that really helps us with the setup process, and that is we essentially tell QuickBooks this is the type of business we are. We're a merchandising business in this case, and we have services as well, meaning we sell stuff. In our case, we're going to sell guitars, and we also have services. Therefore, telling QuickBooks that, QuickBooks can automatically generate what we will call a chart of accounts here, and just give us chart of accounts that we can start working with. We can start building our transactions with this automatically generated chart of accounts. That, in essence, is what we will first have to generate within our Excel format to work the problem forward. So let's see what QuickBooks did when we just tell QuickBooks, hey, we're a merchandising company, give us a chart of accounts. QuickBooks spits something out such as this for the chart of accounts. We have the type of accounts and we have the name of accounts. I'm first going to go over the account types because this is really the driving factor in terms of how QuickBooks will record certain transactions and the ordering of the chart of accounts. It's going to be in order, in essence, by the accounting equation first, which is assets equal liabilities plus equity. And then equity is broken out between equity and then income and expenses. So in essence, first we have assets, liabilities, equity, then income or revenue, and expenses. That's going to be the order of these accounts. Then within that, QuickBooks breaks it down even further. It'll break it down first to cash and then to accounts receivable, two accounts we don't yet have here in the QuickBooks example, haven't set them up yet. And then it's going to go to other assets, fixed assets, other current, that's going to be it. That'll be it for the assets. And then we're going to go to liabilities, which is going to break out to other current liabilities. And then we would have long-term liabilities or other liabilities, if there were any. There are none at this point. And then we have the equity type of accounts. Then we have the income or revenue type of accounts. Then we have the expense type of accounts, starting with the most important expense type, that of cost of goods sold, followed by all the rest of the expenses. If we look at the accounts over here, we note that they are not in order by alphabetical order. We have an account that starts with A, but then it goes to furniture and then something with an S over here and whatnot. So it's not in alphabetical order. It would not be in order of account number, not primarily, although if we were to set up account numbers and do it well, we would set up the account numbers to follow the same ordering of the account types so that it would, in essence, look like it was in order by account number. But we're first being driven by the type of account here. Within the type of account, if we don't have account numbers, it will then order within that type in alphabetical order or in the order of account numbers if we choose them. Meaning, For example, if we have all these expenses here, within the expense section, we have it in order of the alphabetical order from that point forward. So that's going to be how it will be set up here. If we look at the accounts, we have accumulated depreciation, we have furniture and fixture. These are going to be fixed assets. We've got the security deposits, which is going to be an other asset, payroll liability. That's going to be a liability, opening balance, draws, and owner's equity, our all equity accounts. Then we've got the merchandise sales revenue or sales discount. We've got the fees, and then we have all the expenses here. This is what we're going to set up now within our Excel format so that we have these accounts that we can use in order to work transactions. As we set up Excel, I'm not going to go through the actual setup of the whole process. I'm just basically going to go over the worksheet that we will be using and then look through that worksheet. If you'd like to get something on in terms of how to set up this whole worksheet, then we can do that at a later time. But for now, we're going to go over its components and then use a worksheet like this in order to see the detail of the transactions that would be done within accounting software. In essence, we're going to start with a chart of accounts. This chart of accounts is just a list of accounts, and again, it will be in order by assets, that in our case will be in green, and then liabilities, then equity, then income and expenses. It's not further broken down into any subcategories here, although it's going to be in a similar order. Typically, the idea would be that we would want it to be in order of liquidity for the assets and things like current liabilities before long-term liabilities for the liability type of accounts. So it doesn't necessarily have to be in alphabetical order within the types of accounts. For example, all the expenses don't necessarily need to be in alphabetical order. That's going to be the default for most accounting software, and if you wanted to deviate from that, you can use account numbers, and the accounting software will then order by the accounting numbers within each subcategory. So our first goal is just to list these accounts, and we would just put the accounts here and list them out. Now you might be asking, where would we get this chart of accounts? And like QuickBooks, QuickBooks is in essence compiling the data of the common accounts for a type of industry. So if we choose a merchandising type industry, someone who sells inventory, we can get a pretty good idea of the type of accounts. For example, every company is going to have a checking account. Every company is going to have accounts receivable pretty much, meaning people that owe them money. And then we're going to have inventory assets. If we sell stuff, we're going to have inventory. And then we have prepaid insurance. This was something not on the chart of accounts. This is actually a more comprehensive chart of accounts here than we are starting with, than we just looked at in terms of the QuickBooks file. But we're going to add a few more of these accounts here. And then we got the short-term investment, undeposited funds, accumulated depreciation, furniture, and fixtures. Now, some of these we may not, when we first start out, have included. We may not have them there. And we may not have, we could start recording transactions without any accounts, any chart of accounts, and just add them as we go. But that's a little bit more difficult of a process because then we have to add the accounts each time. So what we're going to do is we're going to put all the accounts in place, or at least most of them, and then go through and record these transactions. Then every company pretty much has an accounts payable. We might have a credit card like a Visa account. We're going to have interest payable, which we're going to use later, loan payable, we're going to take out a loan, payroll taxes, unearned revenue, loan payable, and then we have the equity section, and that's going to be the draws and the equity. We will be a sole proprietor. And then we have the sales, merchandise sales, and the rent on the music, service. This is all revenue. And then the expenses, cost of goods sold, and all the other expenses. That will be our list of accounts. Now here we're also going to include the general ledger. And this is something that's not often seen within QuickBooks, because within QuickBooks we typically jump right from a data input like writing a check or entering an invoice to the financial statements, and in QuickBooks or some accounting software will just generate the financial statements, and we don't need to take a look at the other steps. We just say, hey, I just entered a check, what did it do to the balance sheet, or what did it do to the profit and loss or the income statement? But if we get an idea of the process, how to set it up, then we'll see how this stuff is built. That's what we get from working it more in a paper and pencil format, more in an Excel format. And the fact that we can automate it is, of course, great. Once the data is input, then we can set up, as we'll see here, we're basically setting up a program to just automate everything that happened and generate the financial statements. But if we understand what the actual steps are in that automation process, then we can go back when there's problems and we can see what QuickBooks is actually doing. We can interpret what is happening. We can better interpret the financials that are made. And if there are a problem in the financials that are made, we can better troubleshoot that problem and figure out what is going on and what went wrong. So the chart of accounts then, or the general ledger, is going to be just the same accounts, same order. We have the checking account, accounts receivable, inventory, prepaid insurance, checking account, accounts receivable, prepaid insurance, and inventory. And then it goes the assets, liabilities, equity, revenue, expenses, assets in green, liabilities in orange, and then we've got the equity, and then we've got the revenue and expenses. So this is a long, intimidating looking worksheet, I know, but all we did was put it in the same order, and we gave some more space here. Why do we need this other list of accounts if it's the same list of accounts as over here? Because this will give us the detail. It'll give us an ordering by date. As we enter transactions, we're going to say, hey, what happened to cash by date, by order of transaction? And then it'll give us a running balance over here and tell us what that ending balance is. And that ending balance ultimately will be what is on the balance sheet, what we use to create the balance sheet. However, to create the balance sheet, we typically would make a trial balance, record it on the trial balance, and then use that trial balance to create the balance sheet. So all these accounts over here are just the same accounts as over here. They're going to give us the detail of the transactions by date of transaction, give us the running balance and the ending balance. That ending balance then used to create the trial balance. So these amounts here are just being generated from the general ledger within the trial balance. And then the trial balance will be used ultimately to create the financial statements. So these financial statements, it's hard to see when they're all zeros, but we will see as we go, are being generated from the trial balance. And that's the same automation that, in essence, the accounting software is doing. That's what allows us to go from just entering a check and just jumping over here then to the balance sheet and say, hey, what happened to cash in the balance sheet when I just wrote that check? It's really going through the detail. If there's a problem, if the balance sheet doesn't look right after we wrote that check, what are we going to do? Well, we're going to go back to the general ledger. We're going to look at the detail and say, hey, where is that check? How come it's not appearing as I believe it should be? And it's probably going to be a date issue if that happened. And then we'll go through and take a look at that. So that's in essence what we're going to do here. As we build this, it'll give us a better idea of what QuickBooks is doing. As we do that, then we're going to record transactions with the general ledger, with the general journal that will then be posted to the general ledger to create the trial balance and the financial statements. So we'll compare and contrast common type of transactions within QuickBooks. And those types of transactions are things like making an invoice, writing a check, making a bill. And all those transactions within QuickBooks, it's set up, or any type of accounting software, so that we don't really need to know debits and credits. We don't really need to know what's going on with it, how it's being recorded. All we need to know is how to put in the information to enter an invoice or write a check. And QuickBooks automates all the rest of it. What we will do here is we'll do the journal entry that QuickBooks in essence does when we write a check, when we create an invoice, when we enter a bill, and then we'll go through and post it to the general ledger and post it to the trial balance and see what happens to the financial statements and get an idea of how the whole thing will be built in a process that will be closer to done in a paper and pencil process, this transparent process, and that'll give us an idea of what is going on within a computer system. This will help us out if we're, an accounting student and we're going to something that we learned theory and going to QuickBooks or some accounting software and trying to see what the software is doing, or if we're someone who has learned a lot about accounting, a lot about how to enter transactions and work with programs such as QuickBooks, and now we want to have a better understanding about how to work the data better within QuickBooks, how to set things up better, how to see how things work. This will give us an idea of how things are working within the QuickBooks program. or if we're just someone that wants to that's running a small business and we're using the software and we want to get a better idea of what the software is doing so we can troubleshoot types of problems. Hello, in this presentation we will start a new company file within QuickBooks. We will be running a store and the store will be selling guitars. First thing we'll do is run QuickBooks by double clicking on the desktop icon. Once QuickBooks is open, you may see a window like this, and if you have been working on prior company files, then those could be listed here, giving you a shortcut option to open those directly. You may also be taken directly to a company file that was prior worked on, the last one that you were working on. Either way, if you open a prior company file or if you open this window, we could go to the same icon in order to start a new company directly from that area. We can also use these buttons down here, create a new company, open or restore, open a sample file. We will be creating a new company here. I'm going to show you how to do that, however, with the drop down. If you follow along with the PDFs over here, they will have a little bit more zoomed in picture, and we'll try to keep a zoom out picture so you can see the full screen when we're actually working with the program. So the PDF next instruction is to go to the file drop down and go to new company. Back to QuickBooks, we'll do that. We're going to go to File, and we're going to go to New Company, starting up a new company file. Once you open this page up, you get something looking something like this. Now there's a few options. We have the Start option here, which will basically take us through an interview process. We have some other options over here. The Open Existing File, which would open a file we already had. We wouldn't want to go through this process to do that typically. Convert QuickBook data, so if we needed to convert the data. Convert other accounting software, so if we had software somewhere else and we're trying to export that into here, then we would use that process. Set up on behalf of someone else, or advanced setup. We're going to start a new company from scratch, and so we're going to go to the startup. Now note that if you are having a running company and you need to put that information into QuickBooks, although you have prior financial data, we could still run a similar process and basically put that information in as of this point in time, meaning you would basically take the last financial statements or the last financial data, or the financial data you have as of the point in time. We're going to start QuickBooks up and put that in as of your beginning date. So we're going to start the setup process here. First, we have the email and the user password. We could enter this without a password, but you really want to put a password in there because it does protect the data. Just remember, make sure you put that password somewhere secure so that you have it when you go back to it. It can be a problem if there is not a password, or if you forget the password. So make sure that that is secure as you put the password there. Next, we're going to input the company data, including the business name, the industry, the business type. Then we'll have the EIN number and the address. Note that the red asterisk here means that these are required fields. So if you're setting something up really quickly, then those are the ones you really have to have. And the other ones, of course, if this is a long-term business that you're going to be working with a lot, probably want to enter this data. The address and the city and whatnot will be used when we start formatting documents such as invoices, such as bills. Here's the data we will be using here. So if you want to follow along with this example, we're going to say we are Get Great Guitars. The industry will be the retail shop or online commerce. You can select this icon here to help you find that. We're going to be a sole proprietor rather than a corporation or a partnership. We're going to use this EIN number. Remember that the EIN number is really just the tax identification number. It's kind of the social security number of the business. If you are a sole proprietor, it may be the social security number. You may want to leave it blank if that's the case, but it will be used in some areas, including like 1099s. If you have employees, this is a required field. If you don't have employees, then, well, if you have employees, it's a required field to fill out the W-2s, which you'll need to do with some type of EIN number. If you don't have employees, you may still want to get an EIN number so that you can issue 1099s without having to put your social security number on it. That's an issue just to go to the IRS to get an EIN number. Then we have the business here, and this is going to be the address, 244 West 23rd. We're going to be in New York, and the zip code 90011. going to keep the phone blank for now, and that will be that. Next, we will create company. It will take a little time to load up the company. We are going to start a new data file, so it's basically creating an entirely new QuickBooks file at this point. We currently have this update. QuickBooks will give you some updates as we go through this, and the updates could be things offering you something like a payroll service or something like that, or just telling you what the updates are. You do want to add the updates from time to time so that you're the most current with the QuickBooks software. It is something that if you're connected to the internet, and you should be, then you'll get continual updates within the QuickBooks software and continual service packages and whatnot that will update the software as we go. So that's what we're basically saying here. You may get some other pop-ups such as this one, which is get paid faster, payments, payroll, checks and supplies, all great stuff, but not stuff we're looking into at this time. They are stuff that you can look into at a later time. You will probably see more information, more pop-ups basically related to these types of items as you work through this. These are items that are useful, both obviously payment methods, setting up payroll, something that we discuss and will continue to discuss, and save time with printing in terms of having checks and ordering checks are all things that could be very useful to have. But right now we're just going to be working with QuickBooks itself, so I'm going to close that up. QuickBooks does offer the tour. We've taken a look at some of these items before, but when you set up a new file, it'll give you a bit of a tour here that you could walk through and see through that. But again, I'm going to go ahead and close this out for now. QuickBooks will typically open to the home page here. Just going to check a few things. So first I'm going to go to this drop down. We're going to go to the lists drop down and take a look at the chart of accounts. Lists and chart of accounts. Just to note the chart of accounts that we have here. Now this chart of accounts was generated by QuickBooks by choosing a shop, a retail shop. Note that if we were a service company and we chose a service company, we would get a different list of accounts. Now if this is a pretty basic list of accounts, so choosing the type of industry you're in will give you an idea if you're not used to basically account names, or if you're worried about setting up an account type as an expense versus an asset. Then this will give you some account names, and you want to try to stick to those as much as possible. If you're within the industry that you have picked, then they usually pick pretty good account names. If you were to name them yourself, then it might be better in some ways because you can get more specific in terms of exactly what type of expense accounts you want to call them. But if you use the standard accounts here, they're going to line up more often to standard account type categories, which could be good for benchmarking. It could be good for making financial statements. It could be good for the tax returns because it'll tend to group them in accounts that people like accountants recognize more clearly. But there's pros and cons to that clearly because they may not be accounts that you recognize as clearly. And if you're running the business, you might want to name an expense account something specific to you. So we can add expense accounts as we go and make custom expense accounts. We might have more accounts here than you need in terms of these types of industries. So you could go through these and we could actually delete some of these expense accounts and some of these accounts overall if they're not something applicable to the particular business. Typically, the expense accounts would be the ones where we have more expense type accounts than any other type of account. But again, generally not too bad of a list. Good thing to start with. It kind of limits our ability to make mistakes by adding accounts in the wrong category or something like that. I also always like to go to the View tab up top and go to Open Windows and open Window List, and now we can see the windows that we're currently working with at this time. The next item of our instructions on the PDF is to go to the Adjusting Preferences. So we're going to go to the Preferences here and look through all these preferences and see which ones we want to keep, which ones we want to change. In order to do that, we're going to select the drop down for the Edit drop down and go all the way down to Preferences just as it has in the PowerPoint slide, in the PDF slide, and then we'll see these preferences icons. I'm going to pull this over to the top. Now, if you take a look at the PDF, it'll zoom in a bit more. I'm going to try to keep the big picture screen here so that we could see the big picture and where we're actually at in terms of QuickBooks as a whole. So we're going to start off here. We're going to go up all the way up to Accounting Preferences. Notice that on the left-hand side we have all these different categories, and then on the right-hand side we're going to have oftentimes two tabs and go into these preferences within each of these categories. So we got a lot of preferences, so we'll go through these. We're going to start with the accounting preferences. We have two tabs up top. We've got the My Preferences and we've got the Company Preferences. Obviously nothing here in the My Preferences. We then will go to the Company Preferences. So if we look through these, the first one is Use Account Numbers. Now, if you're good with account numbers, I highly recommend using account numbers. But if you've never used account numbers, it's really easy to misnumber your accounts. And therefore, the numbers will actually be out of order and they'll be pretty much useless if they're not properly numbered. So properly numbered accounts mean that all the asset type accounts should have the same sequence, and then all the liabilities should have the same sequence, and then all the equity should have the same sequence, and so on, so that it will be in order of assets, liabilities, equity, income, and expense. Then within those categories, the number sequence will then number in accordance to the number categories rather than alphabetical order. So note that the numbering is basically the second thing that does the ordering system, the first being the account type, and therefore we have to create the numbering system in accordance with that type of ordering system. If you're not familiar with that, you can just not check the numbering system and it'll still order it in terms of assets, liabilities, equity, income, and expense, but within those categories it'll order by alphabetical order. The problem with that is that every time you create a new account, it'll shuffle up the accounts in accordance with alphabetical order rather than some other method that might be better in terms of which accounts are used most often, possibly might be a better method. And then we've got required accounts. We want to have that checked. Use class tracking for transactions. We're going to have that unchecked. Automatically assign general journal entry numbers. That's typically a good internal control type thing, so it's going to automatically number every time we make a new journal entry in order. Warn when posting a transactions to retained earnings. This is typically another thing that we want to keep in as the default. When we have retained earnings, we don't typically post to retained earnings or whatever account we're closing out to, whether that be the capital account or retained earnings. If we do have something posted there, it's usually something funny happening. So it's kind of good to see the warning here. That's usually just the account that the system closes out to. So then we're gonna have a warning if transactions are 90 days in the past. Now this is a good warning typically to have. We're gonna delete this warning because for this purposes we're actually going to be working out in the future, just so we can work through this problem. So we're not going to be working in the current time. We're going to be working in basically a future time. And therefore these would be very annoying in this problem. So I'm going to check these. If you're following the date ranges we are using, then uncheck these. If you're not, for other preferences, then keep those checked. Next we'll move down to the bills here. So we're going to go to the bills on the left hand side, bills, and when it says changes, save changes, do you wish to save them? We're going to say yes, because we just saved the changes to the prior tab and that will save them. Remember that you still do have two tabs up top. We're currently in the Company Preferences tab rather than the My Preferences. And here we have bills are due 10 days after the receipt. That's a pretty good default to have, so I'm going to keep the bills there. Warn about duplicate bill numbers from same vendor. That's a good check to have, so we'll go ahead and keep that. Paying bills, automatically use credits. We're not going to have that. Automatically use discounts. We're just going to keep the defaults within this item here. Then we're going to go to My Preferences, and there's no items within My Preferences. There are no preferences here, so we're going to move on to the calendar. Within the calendar tab, we once again have the My Preferences and we've got the Company Preferences. We're basically going to keep the defaults as given in the calendar, and then we're going to move on to the checking here. So we've got the checking account. We're going to start with the Company Preferences, so in the Company Preferences side, and we're basically going to keep the default for most of these. We have print account numbers on the voucher. It's defaulted as unchecked. We're going to keep that. Change check data date when non-clearing checks is printed. We're going to keep the default. Start with payee field on check. We're going to default as unchecked. Warn about duplicate check numbers. That's a good safety to have, so we're going to keep that checked. If we duplicate a check number, we're going to tell ourselves that. Autofill payee account number in check memo. So this is also a nice thing to have, this autofill as we go. It's going to save us time as we move forward, so that's a good thing to have. Select default account to use. Open and create checking accounts. We're not going to set the defaults at this point. This could be useful in the future in order to save time. So you may want to look at that in the future. Bank fees, view and enter download transactions. Express mode, create rules automatically. Always ask before creating rules. We're going to keep the preferences there, the defaults, and we're going to go to My Preferences. When we select the My Preferences, we have the open write checks, the open the pay bills, open the pay sales, and open the make deposits. What we're going to do there is we're looking to have the actual checking account, our main checking account, be used, but we haven't entered the main checking account yet. So at this point in time, we're not going to put anything in the checking information, and we're going to move on to, we're going to skip ahead to the General tab. So we're looking at the General tab. And we have once again, 2 tabs up top, My Preferences and the Company Preferences. We're going to keep most of the defaults. So presenting enter moves between fields, pressing enter moves between fields. We're going to keep that as unchecked. These are going to be preferences that may move faster through QuickBooks with keystrokes. So if you're, you have preferences in terms of tabbing through data or pushing enter to get through data, that could be useful to just be a little bit faster. Next one, automatically open drop-down list when typing. That one's going to be checked off here. That'll be a little bit quicker, again, to see that autofill feature and then be able to see which the list is and pick it as we see it. And then the next one is beep when recording transactions. Some people really like that, some don't, but if you don't have that, sometimes it's possible to not have fully recorded the transaction and not be aware of it and move on to another screen and it having not been recorded. Automatically place decimal point. So some people like the decimal to be placed in there all the time, and some people like to type the decimal in there every time. So that's one of those type of things that if you move to a different computer that someone else has that on a different setting, it can be, you get used to whatever setting you're on, in my experience. And then the next one says warn when editing a transaction. Typically a good check to have if you are experienced and you feel that when you edit a transaction you don't need a warning, you can uncheck that. Bring back all one-time messages. We're going to keep that as unchecked. Turn off pop-up messages for products and services. Probably want that unchecked. But there might be some good services that they do provide, and the payroll is going to be one that typically comes up a lot. Same with, do you want to have checks? Do you want to have other type of billing options and credit card options, which are all things you may consider in the future. Then we have show tool tips for clipped text. We're going to keep that checked. Warn when deleting a transaction or unused in a list. We typically want the warning just to double check ourselves when we delete something. QuickBooks does let you delete more things than other accounting software would, so an extra warning is probably good. Automatically recall information. Automatically recall account and transaction information. Pre-fill accounts for vendor based on past entries. This can save a lot of time because it'll kind of tell you what we did last time, which is probably typical to close what will happen this time. So that's a good default to have typically. Default date to use for new transactions. Use the last entered date or use today's date. You may want to choose either of these. We're going to keep ours with the last entered date, which is going to be helpful considering the fact that we will be working with transactions in the future. It also depends. I mean, if you're always working in the present, this would be a good option. If, however, you wait till you have a business where you're entering the data from the bank statement or something like that, or entering it monthly, then this option would be more useful. Keep custom items information when changing items in transactions. We'll keep that as ask, and then go to the company preferences. Company preferences show portions of an hour. We're going to keep the minutes here rather than the decimals. Always show years in 4 digits. We'll keep that. Never update name information when saving transactions. Save transactions before printing. So we're going to say, rather than having to hit the save button each time, It's always going to save it and then print it. And then log off every time a user closed the company or exit QuickBooks. So we're going to have it log off every time QuickBooks is exited or closed. Next, we're going to skip to the items and inventory. And this gives you kind of a look at what we're going to have in terms of items and inventory, because when we look at items, when we think of items, we're thinking of inventory. Now, purchase orders and inventory and purchase orders are active. We're going to change that. We're going to say it is. We're going to use purchase orders in this example problem to see what those purchase orders can do and how they are used. And then we'll keep these here. So make sure to make that change. We're going to warn about duplicate purchase orders. We're going to warn if not enough inventory quantity is on hand. Then we're going to go over to the My Preferences. We have no My Preferences, so then we're going to move on to the next item. We're going to skip down to Jobs. Let's go down to Jobs, not skipping. And we're going to say yes, we're going to save that change that we just made to the inventory items. QuickBooks must close its open windows to change this preference. So I'm going to say, okay, go ahead and close the open windows to change the preference. And now we are on the Jobs preference, My Preferences. We're going to keep that the way it is. Then we're going to go to Company Preferences, and we're going to keep the pending, the awarded. We're going to keep that in progress, closed, not awarded. And we've got the do you create estimates? We're going to say yes. Do you progress invoice? We're going to say no. And then we're going to do you do process invoicing? No. And then we're going to warn about duplicate estimates. We're going to say yes here. Now, if your information is different here, it's probably because we had not checked that items on the inventory tab, and or we didn't select the same type of company in terms of a merchandising company. If we had checked off the same type of company, this are probably going to be the defaults you have at this point. We're going to skip through some of this stuff, the multiple currencies, the payment, and then we're going to go down to the payroll preferences. Payroll preferences. And within payroll preferences, I'm in the company preferences tab. We're going to keep the full payroll. We're going to have the recall quantity field on checks, recall hour field on paychecks, and job costing and item tracking for paycheck expenses. All those be checked. We're going to have the first name checked at the bottom here. We're going to talk more about payroll as we go through this and how to set up payroll. We will do the manual payroll system. We're not going to be implementing any of the payroll services, although those are something that we will want to consider and discuss as we move through. We then have the My Preferences tab, and there's nothing within the My Preferences tab, so we're going to move down to the Reminders. Reminders. In the My Preferences tab, we've got just Show Reminders List when opening a company. I'm going to say no here. I'm not going to keep it that. I'm not going to check it. I'm going to keep it as the default. That might be something, however, that some people really find useful, to have the reminders pop up every time they open, so they have an idea of what they're doing. But we are going to be using a company file within the future again, and therefore the reminders tab are going to cause us more problems than help at this point. So here's all the reminders. Now again, a lot of these could be very good to use in practice. However, because we're working a practice problem, our dates are going to be different or off. And we're going to have to be moving into the future and back into the past so that we can do an extended problem within an extended period of time. Therefore, we're going to turn off all the defaults. So if we go through there, checks to print, show the summary. Again, that would probably be something that could be useful. It would give you a reminder, a pop-up to show you that. Paychecks to print. So again, there could be invoices, credit memos to print. Overdue invoices, it might be useful to know that. Almost due invoices. And then we've got sales receipt to print. I'm going to say no. Invoices to reorder, bills to pay, memorize transactions, money to deposit, purchase orders to print, and to do notes. Again, some of those you might want to look into for your own purposes. For the purposes of this problem, we're gonna remove those. You may want to keep the defaults. The defaults would be typically a good recommended settings. If they start to get in the way or annoy you, or you find them as not being helpful, then here are where you find them in the Preferences tab. Here is where you turn them off within the Preferences tab. We're then going to go to reports and graphs, and we're going to save those changes we have just made. Reports and graphs, I'm going to start from the My Preferences tab, where we're going to have prompt me to notify report options before opening a report. We're going to keep the default as unchecked. When a report of a graph needs to be refreshed, we're going to keep it as prompt me to refresh. Actually, I'm going to change that one. I'm going to say to that one, we're going to have refresh automatically, and so that it'll refresh automatically. So whenever we go and change data and then go to a new report, it'll refresh that automatically without prompting. Next, we're going to go to the company preferences up top, company preferences. We're going to keep the accrual basis here. So the difference between the accrual and cash basis, you could take a look at those differences. Typically, you want the accrual basis for a couple reasons. One is that you might have accounts receivable or accounts payable that you want to track, and those are both accrual accounts. So for those purposes alone, the accrual basis might be something that you want to keep as the default, but there is the option to go to the cash basis as well. What this mainly means is that we are reporting revenue and expenses either when we did the work, mainly basically when we issue the invoice in terms of QuickBooks, or we're going to do it when we record the cash, and it's going to be the major difference between those two types of reporting settings. So if you got any questions you want to ask your accountant or your CPA on that to see if which of those would be better. But accrual is the default and considered the more accurate method most of the time. Aging report, age from due date. So we're going to keep that there. That's going to be for the AR accounts receivable aging and the accounts payable aging when we try to run reports to see how old things are in terms of how past due payments are, for example, to vendors or payments to us from customers. Reports show items by name and description rather than name only. We're going to keep that as the default, and reports show account by name only. Statement of cash flows. We're not going to get into any more of the defaults within the statement of cash flows at this time. These are all, of course, within the company preferences, and we've taken a look at the My Preferences. We're going to move down to, we're going to skip sales customers. We're going to go to sales tax, and we're going to save changes that we have made within sales tax. 2 tabs. We've got the My Preferences, nothing there. Therefore, we're going to go over here to the company preferences, and we're going to say, do you charge sales tax? We're going to change that. We're going to say yes, and we're going to say the sales tax item is going to be here. And we're going to pick the item. It's going to be sales tax item, sorry. And that's going to be the item that we're going to have, sales tax name. And then we're going to pick the default for the sales tax amount. Now we're going to keep things fairly generic here. We're going to call it the sales tax. We're going to keep it the sales tax. We're going to have the name be, 5% being the percent, that not being the actual percent, but the percent we'll use just for an example problem to show the demonstration of sales tax. Clearly, it'll be different from state to state, as sales tax is a state tax. Next, we're going to have to select the agency. So I'm going to go ahead and select a new agency. And this is basically just the vendor where we're going to pay the sales tax. Now, I'm just going to give it a name so that we can basically record the sales tax as we go. This would be who we are writing the check for once we collect the sales tax. So whenever we make a sale and we have to charge sales tax, we're going to collect the sales tax and then pay it here. Again, this will change from state to state, so I'm just going to keep this generic and call it New York State sales tax, just to have the vendor. That's who we're going to pay in this process. So whatever state you're in, you're going to have to figure out who you're paying your sales tax to, and then how much the rate is, and then we're going to have to be able to collect that and then pay that to the vendor, that being the government agency involved for the collection of sales tax. I'm not going to fill out any of the other information and keep this nice and generic. Note that we have the address here, the payment settings, just like we would for the vendors. And we'll see this more once we get to vendors. This is just a typical vendor window that we'll work with as we go. So there we have that. We're going to say OK. And sales tax will then be set up. The rest of the sales tax we're going to keep within the default settings. So we have identify taxable items as T for taxable when printing. When do you owe sales tax? as of the invoice date on the accrual method, and that's what we're going to keep with. And then when do you pay the sales tax? We're going to pay monthly within the sales tax. So we're going to collect the sales tax throughout the month on sales we make that are subject to sales tax, and then we're going to make the monthly payment based on those collections that we have made to the vendor that we have just set up. So we'll see that process as we move through this. That's going to be it, however. We're not going to do any more on the preferences. So finally, we have completed all of those preferences and can now move forward to setting up our company QuickBooks file further. Make sure to make all existing customer taxable, make all existing non-inventory. I'm going to say OK as we move out of there. And that's going to be it for the preferences.